Welcome to The Explainer. Today, we are diving into a really shocking day on Wall Street. I mean, it was one of those days that sent a chill through the markets and left pretty much everyone asking, what in the world just happened? So let's jump right into the numbers.
First up, the tech-heavy Nasdaq just got hammered, dropping almost 1.6%. That's a huge red flag, a clear signal that the market's favorite stocks were in some serious trouble.
And, as tech was falling, fear was just exploding. The VIX, that's Wall Street's fear gauge, it leaped almost 17%. That is a massive, massive surge in anxiety across the board.
But this wasn't just some paper loss on a screen. On the very same day, we found out that companies announced over 108,000 layoffs in January alone. That's the highest number we've seen since 2009. Talk about a jarring dose of reality.
Okay, so let's get into it. You've got a tech plunge, a massive spike in fear, and a really grim jobs report, all hitting on the same day. The question on everyone's mind is pretty simple. Why did everything seem to fall apart at the exact same time? We're going to unravel it.
So first things first, let's get a really clear picture of the damage. Here's exactly how the major market indices looked when the dust settled on this chaotic day.
And as you look at these numbers, the big takeaway here is that the pain was absolutely everywhere. This wasn't just a tech problem, not at all. The S&P 500, the Dow Jones, they were also down big. This was a broad retreat, a flight to safety across the entire market. And that huge jump in the VIX, yeah, that confirms it all. So what caused this widespread panic? Well, it wasn't random, that's for sure. It was more like a perfect storm, right? A combination of three different pressures that all decided to hit the market at the exact same time. So here's what was happening on the surface. First, you had this major sell-off in big tech that had been going on for a few days. Second, that awful jobs report came out and just spooked everybody. And third, investors just ran from anything that felt risky. We're not just talking stocks, but assets like Bitcoin and even crude oil. But, that's the simple story. That's what you read in the headlines. The real story, the one that the smart money is paying attention to, is way deeper and a lot more complex. So let's start peeling back the layers. This right here, this is the puzzle at the heart of the whole day. Alphabet, Google's parent company, reported fantastic earnings. I mean, by all accounts, the results were great. So why did the stock fall? And why did that one move send a shockwave through the entire tech world? And this quote just nails it. This is the core of the issue. The market's entire mindset has shifted. It's not enough anymore for a company to just say, hey, we're spending billions on AI. Investors are now asking a much tougher question. Okay, that's great, but when are we going to see a real return on all that money? Good results weren't cutting it anymore. The market wants proof that the AI spending spree is actually paying off, right now.
Now let's look at that jobs piece of the puzzle. This quote from Mohamed El-Erian is so critical. Think about it. A strong economy with 4% GDP growth should be creating jobs, right? Not cutting them at a record pace. This split, this divergence, it's not normal. It suggests something deep is changing. Maybe that AI and tech are replacing jobs way faster than our economy can create new ones.
So how do you process all of this as a smart investor? Well, it really comes down to thinking like what we're calling a Sys2 investor. It's all about pushing past that initial gut reaction panic. That's your System 1 brain. And instead, you activate that slower, more analytical System 2 part of your brain to really understand these deeper shifts happening with AI and the job market. Okay, so with this deeper understanding, let's translate it into an actual game plan. Because, let's be honest, understanding what's happening is one thing, but knowing what to actually do with your money, well, that's what really matters. We're going to break it down for three different types of investors. All right, if you're a conservative investor, your strategy right now is all about playing defense. It's about preserving your capital. So build up your cash. Be ready for opportunities down the road. Shift your focus to those defensive sectors that hold up well when things get choppy. Companies that sell things people need no matter what, like consumer staples, utilities, healthcare. And for now, it's probably best to stay away from the tech roller coaster. Now, for the balanced investor, this isn't about running for the hills. It's about smart risk management. Maybe think about trimming your tech exposure a bit, say 10 to 20%. Use that cash to strengthen your defensive positions. And this is crucial. Start building a watch list of high-quality tech companies you'd absolutely love to own if they get cheaper. You want to be ready to buy the dip, but you want to do it strategically. And finally, for the aggressive investor,
This volatility isn't a threat, it's an opportunity. The key here, though, is to be really selective and disciplined. This could be the time to start nibbling at high-quality companies that you believe in for the long haul. But don't go all in at once. Enter your positions in stages. This chaos could be the perfect moment to buy great companies at a serious discount.
So, as we start to wrap this up, it's pretty clear that you can look at this market moment in two very different ways. It's absolutely a moment of fear, but it's also a moment of decision for every single one of us as investors. And this slide just breaks it down perfectly. In the short term, the word of the day is caution. This tech adjustment probably has a bit further to go, and things are going to stay volatile. But if you zoom out, if you take that long-term view, this starts to look a lot like an opportunity. The AI revolution isn't over, not by a long shot, and this sell-off is making fantastic companies much more attractive for anyone with a long-term horizon. And that really leaves us with the final question for you to think about. Are you prepared to act when everyone else is panicking? You know, history shows us again and again that moments of maximum fear are often moments of maximum opportunity, but only for those who have a plan. Thanks so much for joining us for this breakdown. If you want to keep making sense of all the forces shaping our world and your wallet, make sure you subscribe. We'll see you next time.